Hello traders. When market open with a gap, it provides us a lucrative trading opportunity to make a quick profit from the market. Like this one here on euro dollar, as you can see, the market open with a gap down. Now the many traders will think that the price on a resistance level, the market open with a gap. So let's sell this market, shorting from here, stop loss above the resistance, take profit here, just to see that this market gone on the other direction, hit the stop loss. Now why this happened? Because most traders fail to decode the hidden meaning of gap opening. When the market opens with a gap, it leaves a clue which way the market will be heading. So in this video, I'm gonna show you exactly how you can decode that clue of gap opening so that you can find the most profitable trading opportunity as soon as you see a gap in the market. If this is something you're interested, then smash the like button, hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. Okay guys and girls, so we'll have two parts in this gap trading strategy. In the first part, we'll look at the reversal pattern, and the second part we'll look at the trend. So first of all, in the reversal pattern, very simple guys, just stick till the end, pay attention what I'm explaining. It will be very easy to understand how to trade gap. Now first of all, look at this one here. If you look at any pattern in the market, it could be continuation pattern. As you know that this is a continuation pattern. When you see an impulse, okay, followed by a triangle, highly likely that this price will break to the upside. So this is a continuation pattern. We could see another impulse. On the other hand, a reversal pattern such as a double top, or it could be a head and shoulder, any kind of reversal pattern. Once you see any kind of a reversal pattern or a continuation pattern and the price opened with a gap from that pattern, keep in mind when the price disconnected from that pattern, then the price highly likely that will be heading in the direction of the pattern. So what do I mean by this? For example, when you see a pattern like that and suddenly the price open with a gap from that pattern, that as you know that this pattern is a continuation pattern. Once the price open with a gap here, the price disconnected from that pattern, highly likely that this price will continue to go up. It's a high probability trade setup. I'll show quite a few examples. First, let me explain and then we'll go to the chart. Now, looking at this one here, this is a double top. As you know that this one is a continuation, but this one is a reversal pattern. So once you saw this kind of reversal pattern, after developing that reversal pattern, if you see that the price open with a gap and disconnected from that reversal pattern, that highly likely that the price will continue to drop. This is a huge probability. Now this continuation pattern, as you know, this is a bullish continuation pattern. It could be bearish continuation pattern like that, an impulse and then let's say a triangle, and suddenly the price open with a gap disconnected from that pattern, highly likely that this price will drop. Similarly, if you see a double bottom instead of double top or an inverted head and shoulder, any kind of reversal pattern, the price created this pattern and then suddenly open with a gap, has gone up, highly likely that this price will continue to rise. So any kind of pattern, once you identify the pattern which way the market should be heading and then the price open with a gap, high probability this price will continue to move in the same direction as the pattern. Now let me show you quite a few examples on this one and then we'll jump onto the second part of this video. Okay guys, so let's look at this example on GJ, on GBP, JPY, highly volatile instrument. Now we'll look at this higher time frame on the weekly, because most gaps open on the weekly and daily. So weekly is very, very important. Though you will not be trading on the weekly, but once you identify the gap on the weekly time frame, you can take a lot of trade even on the 5 minutes time frame. You know the direction, it becomes much easier just to buy and sell and make money from the market. So if you closely look at on GBP JPY, what you see that this is a clear impulse on the weekly time frame, a strong impulse that we're talking about. Let's draw that impulse separately. And then what you have seen, the price created a nice looking triangular pattern, very clear price action, guys, nothing fancy. You can see this is a triangular pattern. And then what happened this week, the price has gone up, has broken all this high from this pattern and grabbed huge liquidity from the top, created pin bar, and then has gone back down below this triangle, created a false breakout on the other side. Normally when you see this kind of pattern, an impulse followed by a triangle, it's a continuation pattern. Now what you have seen, the price has gone up and then grabbed liquidity from here, has come back below, and the next week what you have seen, a big gap opening, amazing trading opportunity. Now with that gap opening, what the price did, in fact, completely disconnected from this reversal pattern. As you know that this price, normally this price supposed to break to the downside. Okay, as you can see, when you see this kind of pattern, what you should see that the price to continue to drop. Now what you have seen, the price just opened with a gap and then melted down. This is a huge trading opportunity. If you closely look at, let's draw this level and see on the lower time frame how much trading opportunity you have in this movement. If you jump onto the lower time frame on the 4 hour, as you can see, the price open with this gap here. This is the lower time frame gap. What you can see, this is the weekend gap, and as soon as market opened with this gap, created this move and then huge move. As you can see, big move happened, and from that place it is a huge trade. Now if you, let's say, take this trade even after you see this gap, after you see this green candles, definitely you need to wait to start another impulse. Even once you saw this impulse, from that level you can have a huge trade. Look at this, how many pip drop it has made. If you count from here, there has been in this move almost 1147 pip move from this gap, guys. Huge possibility. Now the question is, how can you trade this gap? The simplest way to trade this gap, if you go back to the weekly time frame, once you see the gap open, the market, okay, once you see this market open, this one open with a gap, what you need to first wait for this gap to be retested. Keep in mind that market doesn't like to leave a gap open. So once the market open, you need to wait for this price to go ahead and test the resistance level. And once the price tested this zone again, once you see that the price has come back down again below the opening, cross that gap, that is where the real trading opportunity comes. So if you look at again lower time frame, let's say on the 4 hour time frame or even on the lower time frame, the market opened with this, you know, this weekly bullish candle with this gap, and as you can see, every time the price was going high and high. Now this is the opening of this market, right? This is the opening and this is the low. To trade this market, you need to wait for this price to break this gap to the downside. Now as you can see, this candle is a big bearish candle, but if you look at the lower time frame, let's jump on to further lower time frame, even on the 5 minutes, 1 hour also, it is a huge. Now once you saw that this market has broken down, we easily can take a short trade from here, because the market opened with a gap. We know that it is a reversal pattern. The price is likely to drop. Once the price will cross that gap, this is where the entry is, keeping the stop loss above all this high, all this gap, and easily you can achieve 3-to-1 or 2-to-1 risk to reward ratio on this trade. Incredible trading opportunity. Now let's jump on to some other examples to see exactly how to use this gap secret. Okay, so let's look at this example on gold. In the same way, as you can see, gold has formed a nice looking reversal pattern here. There is a clean double top formation with a neckline with a right side lower than the left side. It is a clean reversal pattern. Now with that reversal pattern, what gold has done, as you can see, opened with a big gap and then has broken down completely. Now once the reversal pattern is developed, as you can see, this double top is a clean formation. Once the price has passed that neckline of this double top, if you draw this level, you can clearly see that the price has passed that neckline, closed back below, and the next week the price opened with a big gap. And exactly in the same way, once the price opened with a gap, the first thing, as you know that we already explained, you need to look at where this gap has been opened. You see that there is a clearly defined reversal pattern. The price opened with a gap. That means that this price will continue to drop because it is a long-term now reversal pattern, and from that double top the price should continue to drop, as we know that double top is basically a reversal pattern and the price should be bearish. And then once the price open with a gap, the next thing we need to wait for this price to fill that gap. Now you can see open with a gap, the price definitely didn't go in the first move. We need to wait for this gap to be retested. Once the price will test and retreat back below the opening, that is where the entry is. Now let's look at now second part of this gap trading strategy, how you can identify the gap and trade it. Okay guys and girls, so let's look at the second part of this strategy. When the market is in a trend, it could be an uptrend or could be in a downtrend, but the market has to be in a clearly defined trend where the market is creating series of higher high and higher low, or lower high and lower low. So what do you see that, let's say this market here in an uptrend. Now in that uptrending market, when you see the market in an important area of value, keep in mind in an important level, the market open with a gap down. That is the sign that this market will be bullish. Keep in mind again, when you see a market in an uptrend, the price in an important area of value, the market open with a gap down, highly likely that this market will be further bullish. The price will continue to rise. In a downtrend, completely the other way around. Once you see that the market creating series of lower high and lower low, downtrend, suddenly the price in an important area of value and the market open with a gap up, highly likely that this market will continue to drop. Amazing, isn't it? Let's jump onto the real chart to see quite a few examples so that you can understand clearly how to use this gap secret in your trading. Okay guys, so let's look at this NZD USD. As you can see, NZD USD change its downtrend to the uptrend from here, creating a nice looking double bottom, and then the price has broken to the upside. This is the weekly chart. Why you are using weekly? Because this is where you will see most of the gap opens during the weekend, and this is where the highest trading opportunity comes in on the lower time frame. Now as you can see, after opening creating this double bottom, NZD USD has broken to the upside clearly, and you can clearly see that every week the price is creating a gap down in this uptrend. You can see there is a gap down, clear gap down. After retracing, the price has gone up, created this bullish candle. The same way here, there's a big gap down, and then immediately the price has opened with this big bullish candle. In the next week, exactly the same way, gap down and then created a bullish candle, except this one here. And again we have seen a big gap down. Again, after retracing, the price has gone up, created this bullish candle. This is an incredible trading opportunity. As you can see, every week the price in an uptrend, opening with a gap and then going up, clearly defined in an uptrending market, and the price is pushing high. Now let me show you quite a few examples, and then we'll look at how we can trade it. Okay, so look at this one example here on gold. As you can see in the previous week, this is the recent chart. Gold has created a nice looking bullish trend. Every week the price was creating series of higher low. It is a nice looking strong bullish trend, and suddenly what we have seen that the market open with a gap down here. You can see in this previous resistance turn support, the market open with a gap. It's a slight gap, but which is a pretty important, because this is a very important area of value. This is the resistance turn support. It's like a penetration into a foundation that giving the price to go up further, and with that gap opening, the buyers has bought this market, created a big move to the upside, as you can see. So in an uptrend, gap down, the price started to push up. Now let's look at some example on a downtrend. Okay guys, so let's look at this example on GBP JPY to see how we can find on a downtrend. Now as you can see on GBP JPY, if you closely look at, you can see this candle here. It's a nice looking gap up opening, and with that gap up opening, let's replay the chart to understand. We have seen that a nice looking drop, and afterwards, as you can see, there is a lot of drop. And every week when the price was opening with a gap up, the price first retracing this level and then dropping. So the first thing that you need to do when you see a gap up opening in a clean downtrending market, you need to wait for the price to go up and test the higher part. Once you see the price is retreating back and crossing that opening and closing zone, and that is where high probability trade setup on the lower time frame, because we don't know in fact how much it will go up and then return back. So if you see a gap up and immediately sell, it might hit you to stop loss. So what you need to do is you need to wait for the price to come back and cross that opening and closing zone, fill that zone, and that is where a lot of trade comes on the lower time frame. If you closely look at, you see a lot of examples. There is one here, the same way, gap down, gap up, and then immediate drop. Now what about this one here? As you can see, there is a narrow doji. Let's find out. This one is a gap down, that one is a gap up. What's the difference? So if you closely look at this one, gap down, this is the first part of our strategy. As you can see, there is a clearly defined support zone here, okay, and this is a pattern. As you can see, there is a nice looking pattern here. The price has broken down with a gap down, clearly disconnected from that structure, and that is the first part, and that is why we can consider this one is short. But once it has broken down, it is started a downtrend from this structure. Now it is in a downtrend. Now in the next move, once we see a gap up, that is where we can say that this market is likely to drop. Then where is our trading opportunity? As I mentioned, we need to wait after the gap opening. You will see some movement to the upside to test this zone, and we need to wait for this price to come back again, cross that opening and closing zone, and that is where we will find suitable shorting opportunity along this zone. So let's look at lower time frame to see how this is happening. Now as you can see, whenever you see this is the market open, and then we have seen a movement to the upside. Now this is the candle, red bearish candle. As you can see, this is an incredibly powerful selling candle. If we turn on our TF strategy, we see a clearly defined sell signal according to our trend following strategy. Now once you see this kind of bearish candle, that is where the high probability trade setup. As you can see, you know that this market open with a gap up in a downtrend, so it is a high probability that this market will drop. And once you see this kind of bearish price action that has tested this zone, created a head and shoulder, that is where the high probability trade. And this is the beauty of understanding this gap opening. Even you can take 2 to 3, 2 to 1, or even more than this risk to reward ratio trade, and you see that this market easily has dropped, and you can take the biggest trade possible. I sincerely believe that, guys, this important gap trading video was helpful to you. If you find value in it, then don't forget to subscribe and also check out other videos that you can see in this channel to help you in your trading. Thank you for watching. I'll see you soon in my next strategy video.